If you're a newer trader, you're probably looking for a way to build your overall approach to the market, your overall philosophy for finding good opportunities. Our guest today is Stacy Acevedo. She's going to talk to us about how her philosophy and her way of approaching the market. Stacy, thanks for being here.
Thank you for having me.
Well, if you could kind of describe your overall view of the markets and how you find good opportunities, how would you describe that?
I would say my first love of trading really is swing trading, and because the markets are always going to move, and we always want, bottom line, we're here for one reason, and that's to make money. And people tend to overanalyze everything out there, and so I just want to find a great entry, great exit, and that might be in a day trade, that might be 10, 20 minutes, but my favorite really is swing trading from about, I'd say 1 to 3 days or so, just getting a nice swing and stepping out of the market. And so really, I would say probably the best part about getting your good entry with a swing trade is really waiting for that trade to come to you. Sometimes you don't get a setup for 2, 3, 4 days, and you're waiting as a trader going, I'm missing out here. And so I love index trading, trade with options a lot, and futures trading as well.
So do you set, you'd say, stop losses and profit targets, and when those are hit, regardless of the time frame, you're in or out?
Do I set profit targets? Yes. Do I set stop losses? I do mental stop losses, because what my philosophy really is as opposed to taking stop losses every time it goes against you, we would be out of money pretty quick, because whenever you enter a trade, even though you're at the right trend, inevitably just part of that heartbeat of that movement of that vehicle is going to go against you slightly, and most people panic and step out. So my philosophy really is not stopping out necessarily, but reversing the trade and just managing that trade. Because if I step into a bullish position and the market goes bearish for some reason, at that point I no longer want a bullish position. I want a bearish position. And so as opposed to taking the stop and then finding a whole new trade, I'll just take that trade that I have and reverse it from bullish to bearish. And that's probably been the best part of my success, because we can all, on a bullish day, everybody makes money, right? And on a bearish day, for sure, everybody makes money. But the problem is most people don't keep the money they make. And so by learning how to manage that trade and take those stops as opposed to take a pure stop and not learning how to reverse that, that would be, I would say, one of the biggest mistakes that many traders make.
So if you don't have a hard stop in at the moment you're in the trade, how do you keep that day trade from becoming a swing trade in your mind just because you want to wait a little bit longer and you're going to give your stop a little bit more time to work, when typically that can be fatal? Oh,
good question. And because that definitely is something, it comes to that breaking point of you go, oh no, it's going to break, but really it comes down to technicals at that point. If you're going to be your day trader, your specific detailed trading guidelines, that if your discipline is going to be very, very sharp. So if it does break, if you're bullish, and if it breaks support on strong volume, your oscillators turn over, your other indicators turn bearish, and more importantly, it breaks that support, can't get back above, at that point you do not want to be bullish. At that point you either have to just flatten and get out of your trade, take your stop if you're so emotionally mixed up. But in really the best case is you're a trader, so if it's not going up, it's going to be going down. So at that point, you would reverse the trade, go into a bearish position, but before you do that, you say, where's my next target? Where's the next place it's going to stop? And so it really becomes all technicals at that point, I would say.
Flexibility sounds to be key.
It is, but that's what's fun about this, though, because everybody says, oh, I have the magic bullet, you have to do it my way. And honestly, when trading the markets out there, everybody, you have your set of rules, but then you also say, I have my set of rules, but the market's always changing and moving, and so you have to change and move with that. And you have to say, if it does break what I thought was going to, even though it seems like this was going to happen, it completely changed, news, geopolitical events, whatever it's going to be, and you have to trade along with that, as opposed to get emotionally caught up and distraught and become more logical at that point and just say, you know what, go back to my basic set of rules and keep it as simple as possible.
Stacy, thanks for your time.
Thanks for having me.